Welcome all. Today's topic is cash flow statement. As I promised in the previous class that we are going to look at an illustration for cash flow statement. I'd like to do a question that was tested under CASNEP in November 2015, question 4B. Let me read out the question first before I illustrate. So the question says, this is November 2014, November 2015, question 4B, question 4B, yes, 2015, question 4B. The following are statement of financial position of MBEL Limited as at that is June 2014 and that is June 2015. We have 2014 and 2015. The figures are in thousands. We have property, plant and equipment 152,720 for 2014. 2015 is 234,48. Current asset, we have inventory 33,120, 41,400. Bank balance and cash in hand 6,800, negative 27,60. Total 56,480, 58,792. Total asset 209,200, 289,240. Current liabilities, trade payable 11,040, 16,560. Taxation 13,800, 16,560. Dividend 82,80, 82,80. Total 31,120, 41,400. Net asset 176,080, 247,840. Financed by ordinary share capital 126,400, 181,600. Share premium 11,040, 22,080, 22,080. Revenue reserve 27,600, 44,160. 12% debentures 11,040. Total here we have 176,080, 247,840. Additional information number 1. The 12% debenture was redeemed at a premium of 10% during the year ended, that is June 2015. Number 2. The extract from the property, plant and equipment schedule indicated the following. So we have 2014 and 2015. We have the cost, depreciation and net book value. The same with 2015. The figures are in thousand. Building 88,320, 16,560, 71,660. For 2015, 110,400, 19,320, 91,080. Plant and equipment 2014, cost 110,400, 49,680, 60,720. 2015, 187,680, 69,118,680. Number 3, motor vehicle 36,800, 16,560, 22,40, 44,144. 23,456, 26,88. Additional information number 3. An equipment which had cost 16,560,000 had a net book value of 11,040. An equipment which had cost 16,560,000 had a net book value of 11,040,000 was sold at a loss of 2,760,000 during the year ended, that is June 2015. Number 4, statement for the year ended, that is June 2015, as shown below. We have the revenue. Remember the figures are in thousand. Revenue 281,050. Cost of sales 67,620. Gross profit 193,430. Operating expenses 143,750. Profit before tax 49,680. Tax expenses 19,320. Total 30,360. Dividends, we have interim paid 5520, final proposed 8280. Total of dividend is 13,800. We have the retained profit for the year 16,560. Required a statement of cash flow in accordance with International Accounting Standard IS 7 for the year ended, that is June 2015. For the year ended, that is June 2015. So I'm going to illustrate the question. I hope I have here on the paper. I would like to write the board so that I illustrate the question. We are going to use an indirect method in preparing this cash flow statement. Therefore, we would like to start with the workings. We show the workings, then we proceed and prepare the cash flow. So workings, I'd like to start with these assets, the additional information number 2. Remember assets, these assets we have 2014 and 2015. The balance brought down is 2014. The current year is the balance brought down, and the next year is the balance carried down. Therefore, we are going to prepare account for each asset, building, plant and equipment, motor vehicle. We are going to extract the balance brought down and the carried down, and then any adjustment, if there is, we're going to show it. The same with depreciation. So let me start with the first asset, which is the building account. Like to write this side, building account, building. So let's show the building account, building account, building account. So we have this an asset. The balance brought down for 2014 is 88,320. So we say balance brought down. The balance brought down is 88,320. Remember, the figures are in thousands. These figures are in thousands. The balance carried down for building for 2015 is 110,400. So we say here, balance carried down 110,400. So there is no any other information about the building. That means we are going to balance the building. Remember, for the assets, for the fixed assets, if our balancing figure will be on the debit side, that is an acquisition or purchase. But if our balancing figure will be on the credit side, that is a sale of the asset. Therefore, automatically this question, the credit side is more than the debit. That means we are going to have the balancing figure will be on the debit side. 400 subtract 88,320. So the balancing figure is 2208. That is an acquisition. So we say bank 22,080. So that we'll have 110,400. This 22,080, it is going to be an outflow under the cash flow in investing activities. We'll have acquisition of building account 22,080. So this will come as an outflow. We go for depreciation on the building account. So we say depreciation on building account, depreciation on building account. The balance brought down is on the credit side for depreciations, balance brought down, and then here we'll have balance carried down. The balance brought down for the billing for depreciation was 2014 is 16,560, 16,000. Remember these figures are in thousands, 000. The same with this side. So we have 16,560,000. That is the balance brought down. The balance carried down is 19,320. 19,320. So there is no any other adjustment on the billing account. Therefore, we are going to balance the billing. So we have this side is more 19,320. 19,320. This means the difference now what we will charge in the income statement. So we say here profit and loss account, P and L account. That is the income statement. P and L account. How much? 19,320. 19,320. Subtract 16,560. Subtract 16,560. I'm getting 27,60. This 27,60, it will affect our cash flow under operating activities. This will come as an inflow. But remember, this is only the depreciation on the billing account. We are going to add all the depreciation so that we take it to the cash flow under operating activities. Therefore, we are done with the billing account. I like to wrap this side. Before that, I like to write this amount on that side so that we are going to use them later. So here I'm having acquisition of plant. The figure there is 22,080. 22,080. I'm also having depreciation on plant. Depreciation. Remember, this is building, not plant. Building, sorry. Acquisition of building. So this is building. Building. Then here will be the depreciation on building. Depreciation, building. It's how much? 27,60. 27,60. So I can wrap there. So we go to the next asset. That is working one. Remember, this is working one. This was working one. Working one. Working one. So we go to working two. Working two, we go for the plant and equipment. Plant and equipment. So let's open the plant and equipment account. Remember, in this plant and equipment account, you are going to have three accounts. One for plant and equipment, one for depreciation on plant and equipment, and another one for this additional information number. I think it was number three, which is the disposal of the plant. Let's start with the plant and equipment account. Plant and equipment. Plant and equipment account. Let's have this an asset. So the balance brought down. We are given the amount is 110,400. The amount there is 110,400. Remember, the figures are in thousands. Don't forget that. Figures are in thousands. Don't forget that. 110,400 is the balance brought down. Our balance carried down for 2015 is 187. So we have here, down there we'll have balance carried down as 187, 680, 187, 680. That is 187, 680. Yes. So that is the plant and equipment account. We also open for depreciation. Remember, we are not yet done with this. Still, there is an adjustment affecting that. So let's have the depreciation on plant and equipment account. So we're going to have the depreciation on plant and equipment account. The balance brought down for the depreciation, we are given that 2014 is 49,680. Remember, these are depreciation. So depreciation, the balance brought down will be on the credit side. Remember, the figures are in thousands. 000, 000. So this side will have our balance brought down. The amount for the depreciation amount for plant and equipment is 49,680. 49,680. So let's have it down there. Balance carried down. The balance carried down for plant and equipment for 2015 is 69,000. Lastly, we are going to open also the account for this. Number 3, the disposal on equipment. So we say equipment disposal account. So we like to finish up with this account. Now we are told in additional motion number 3, an equipment which had cost 16,560,000. This means the disposal value was 16,560. That is the purchase or the bank, what they got when they disposed of the asset. That is, let's record that 16,560. Remember, these figures are in thousands, 0, 0, 0, 0, 0, 0, 0. So let's have, that is the equipment. So let's have here equipment. Remember, with this amount, with this disposal value, it's going to affect 2 accounts. It will affect our disposal on the equipment, and also it will affect our plant and equipment. This disposal will reduce our asset. That means we are going to credit on the asset, but we'll debit it on the disposal account. That disposal will going to reduce our asset. So we credit the asset, we debit the disposal account. Let us debit the disposal. Here we have bank of how much? 16,560. 16,560. So it's going to reduce our assets. So let's write here disposal amount of 16,560. Whenever you have a disposal, you debit the disposal account, credit the respective asset account. Next, we are told this equipment had cost 16,560, but the net book value is 11,040. Therefore, we can get the depreciation from this, because net book value, for you to get the net book value, net book value is equal to cost minus depreciation. Therefore, if we want to get depreciation, we can make the subject of the formula. So we can say depreciation is equal to, we have cost minus NBV. So the cost here we are giving us 16,560. So 16,560. Then the NBV is 11,040. We are told the net book value is 11,040. So remember, this is B, not the other B. NBV, net book value. So we take 16,560, subtract 11,040, subtract 11,040. That will give us the accumulated depreciation on the asset. This is net book value, NBV. So if I take the calculator, I take 16,560 subtract 11,040. I'm getting 5520. 5520. Now, this is the accumulated depreciation on the equipment account. Since we have been given the cost and also the NBV, we can make depreciation the subject of the formula by saying depreciation is equal to the cost minus net book value. The cost is 16,560. The net book value is 11,040. Now we get 5520. Now, with this account, with this depreciation, we are going to debit the depreciation account and credit the disposal account. This 5520, we are going to debit the depreciation account and credit the disposal. So we come to the depreciation, we are going to debit. So we say here disposal of how much? 5520. 5520. Then we credit the disposal. So we write here accumulated depreciation. So we say accumulated depreciation. How much? 5520. Then we are told the net book value of 11,040 was sold at a loss. Loss on disposal, you are going to credit on the disposal account. So we have here loss on disposal, 2760. Now we have recorded every information about the plant and equipment. We are just going to balance. Remember, we are having a disposal value, we are having the net book value, and we are having the loss on disposal. We said disposal, we are going to debit the disposal account and credit the asset account. With the depreciation, the accumulated depreciation, we are going to debit the depreciation, account and credit the disposal account. So let us balance our figures. If I balance let's start from the top. This is 16,560 and 187. Obviously, this side will be more. The credit side will be more by how much? So 16,560 added to 187, 680. This coming to 204, 240. If I subtract 110, 400, I'm getting 93,840. And we said if the asset will have a debit balance, the balancing figure will be on the debit side. That means acquisition. So this will be acquisition bank. So that it will balance at 204, 240. You can confirm. If you add 110, 400 added to 93,840, get 204. You can confirm still. 16,560 added to 187,680. Yeah, correct. 204, 240. So this amount is what we are going to be an outflow. 93,840 will be an outflow in our cash flow statement. So we can write there before we wrap that figure. So this was number 1. Number 2, 3, we have acquisition on plant and equipment. How much? You are having 93,840. Let us balance the depreciation on plant and equipment. The debit side will be more. 5520 added to 69,000. I'm getting 74,520. 74,520. Then 74,520. So subtract it from 49,680. 49,680. I'm getting the now. This is going to go to our profit and loss account. How much? 24,840. So right there, you say number 4, depreciation on plant and equipment. How much? 24,840. Still, this depreciation you can do in other ways. You can first calculate the depreciation on the plant and equipment by subtracting the balance brought down from the carried down, then add to this accumulated depreciation of 5520. You are able to get that amount. Lastly, let us balance the disposal account. So the same with disposal. If this will be on this side will be a purchase, but this side will be on the sale, proceed from sale. Let us confirm. 16,560 will be more by how much? So we take 5520, add to 2760, then subtract from 16,560, subtract the answer, I'm getting 8280. That will be a proceed from sale of asset. Proceed from sale of asset of how much? 8280. That will balance at 16,560. 16,560. So on this side, we will have loss on disposal 2760 and also proceed from sale of asset. This loss on disposal, we're going to add back the net profit. the proceed from sale of asset will be an inflow, going to be an inflow in the cash flow from investing activities. So let's have number 5. Loss on disposal. Loss on disposal is how much? The loss on disposal is 2,760. Number 6, we have proceed from sale of asset. Proceed from sale of asset. The amount there is 8280. 8280. Now we are done with the plant and equipment. Let's go to the last account, the last asset account, which is motor vehicle. So allow me to wrap. So we are going to do our working 3. Motor vehicle account is going to be our working 3. You calculate the motor vehicle and also the depreciation on motor vehicle account. Vehicle account, motor vehicle account. Is an asset. The balance brought down will be on the debit side. Balance brought down. Then you will have the balance carried down. The balance brought down for the motor vehicle is 36,800. So we have here 36,800. The balance carried down for motor vehicle is 44,144. 44,144. 44,144. Remember, these figures are in thousands. So there's no any other information on motor vehicle. So we're just going to get the balancing figure. This side is more, so obvious. Now it's going to be an acquisition since it's on the debit side. So we'll have bank of how much? We take 44,144, subtract 36,800, 73,44, 73,44. Like that, we will balance at 44,144, 44,144. So here we'll have number 7. We're going to have acquisition of motor vehicle, How much? 73,44, 73,44. So let's have the working 4. Remember, this is working number 5 because the acquisition of building was working 1, working 2, working 3, 4, 5, 6. These are working 7, Then we have working 8 down there, working number 8. The depreciation on motor vehicle account. Depreciation on motor vehicle account. So this is depreciation. The balance brought down will be on the credit side. Balance brought down. So let's have here balance carried down. The balance brought down for motor vehicle is 16,560. 16,560. The balance carried down for motor vehicle is 23,456. 23,456. There's no any other information on motor vehicle, so let us balance. The balance carried down is more, so obvious this now will go to balance the profit and loss account. How much? 23,456 subtract 16,560 to get 68,96, such that we'll balance at 23,456. 23,456. Now let's have number 8. Number 8, depreciation on motor vehicle account. Depreciation on motor vehicle. $68.96. Now, remember we calculated the depreciation on building 2760. the depreciation on the equipment and plant 24,840, and also we have the depreciation on the motor vehicle 6,896. Now we add the 3 depreciation so that we get the charge for the year, such that we are going to use that as in the cash flow statement. So let's get the depreciation charged for the year. The depreciation charged for the year. We are going to take the one for building 2760, 2760, we add to the one for equipment 24,840. We also add the one on motor vehicle is 6896. This will give us how much? 2760 add to 24,840 add to 6896. 34,496. This is what we are going to use in our cash flow statement. 34,496. Now we are done with these workings we are done with the workings with the assets. Now let's go the one for debenture. The one for debenture as our working number 9. So let's have our working 9 as we are going to. The 12% debenture was redeemed at a premium of 10% during the year ended, that is June 2015. Now I have wrapped the board. We are having the debenture value. If I go back to my question, we have the debenture value as 11,040. So we have it as 11,040. From the balance sheet, we have been given it as 11,040. Now, remember, percentage is always 100%. Now the premium is going to be 110%. 110 over 100 multiplied by 11,040. This is going to give us the premium on the debenture. So 110 over 100 multiplied by 11,040, going to get 12,144. This is the debenture, but not the premium. For us to get the premium, let's say the premium on debenture, we take 12,144 subtract 11,040, subtract 11,040. So 12,144 subtract 11,040 give 11,004. 11,004. Remember, this 12,144 is the debenture, redeemed debenture. This is going to affect our financing activities as an outflow. But the premium on debenture is going to affect, we are going to add back our net profit under the cash flow from operating activities. So let's have here number 9. We have here the debenture redeemed. The debenture redeemed. We have it as 12,144. 12,144. Number 10, we have the premium on debenture. The premium on debenture as 11,004. As 11,004. Let's go to next working. We are done with the debenture and the assets. If I go back to the question, remember we are having taxation. We have the tax expenses, and also we are given the tax, the brought down and the carried down. So let's have working number 10, working 10 as taxation account. The balance brought on the tax will be on the credit side, the balance brought down, and also the balance carried down. The balance brought down If you go back to the question, the balance brought down for taxation is for 2014 is 13,800. 13,800. Then the balance carried down for taxation is 16,560. 16. Don't forget that these figures are in thousands. 16,560. Here in the income statement, you are giving the tax expenses. We are giving the tax expense as 19,320. So we have right here expenses, tax expense for the year. You can also write here the P and L account because it was charged in the income statement. You can write here P and L account or income tax expenses for the year. We are giving it as in the question as 19,320. 19,320. So this account will balance at how much? If I take 19,320 add to 13,800, getting 33,120. So it's also balance at 33,120. So subtract it from 16,560. So getting 16,560. This is going to be now the tax paid. The tax paid. So it's bank. Tax paid. This tax paid, we are going to deduct from the cash flow from operating activities after the change in working capital. We are going to deduct 16,560. Sorry. Now let's do our last working. Working number 11. Working number 11. Let's do our last working 11. Now, in working number 11, it's about the shares. Here we have two shares. We have the ordinary share capital and the share premium. So let's get the issue of share. Before that, I can write this amount of taxation in this side. Number 11, tax paid. Tax paid is how much? 16,560. 16,560. Issue of shares. We are having the ordinary share capital. Remember, these figures are in thousands. See, we issue the shares because our shares has increased. Our shares increased. If you go back to the question, has increased from 126,400 to 181,600. Now we say for us to get that, we take 181. We take 181,600. We want 181,600. Subtract it from 126,400. 126,400. So I will get how much? 181. If I take 181,600, subtract it from 126,400, coming to 55,200. Also, we have share premium. Share premium we take, it is increased from 11,040 to 22,080. So we take 22,080. 22,080. Subtract it from 11,040. 11,040. So I take 22,080. Subtract it from 11,040. I'm getting 11,040. Now, for us to get the total share issued, we add to 55,200, which comes to 66,240. 66,240. 66,240. So our last working here was number 12. So we have there issue of shares. How much? 66,240. 66,240. Now all the workings we showed from working number 1 up to 11. Now want to show the cash flow under indirect method. Remember I said under indirect method we classify the cash flow in 3 activities: cash flow from operating activities, cash flow from investing, and cash flow from financing. So let's go. Undo it. MB Limited statement of cash flow. Let's have the statement of cash flow for the year ended 30th June 2015. Let's have our figures in, remember our figures are in thousands, so let's have here 0, 0, 0, and also here we'll have 0, 0, 0. Now we're going to start profit, cash flow from operating activities, cash flow from operating activities, cash flow from operating activities. Now let's start with the net profit before tax. So to go back to it's already here, so it's no need. Now profit before tax is 19,320. Our profit before tax, sorry, 49,680. So we begin with profit before tax, 49,680. Now we add back, we're having there the loss on disposal. Loss on disposal there is 2760, number 5. Loss on disposal. So we add there loss on disposal. The loss on disposal, the amount is 2760. Then the depreciation. Remember we have added the one for building, the plant and equipment, and also the motor vehicle, which was coming to 34,496. So we also add back the depreciation. The amount there is 34,496. Then lastly, we're having the premium on the venture, 1104. So we're going to add premium on the venture. The amount there is 1104. Now let's add 49,680, add to 2760, add to 34,496, add to 1104, getting 88,040. This is cash flow. This is the cash flow from operating activities. Cash flow from operating activities before the working capital. Before working capital. This 88,040 is the cash flow from the operating activities before working capital. Now we go to the change in working capital. Change in working capital. The change in working capital, we are going back to the question. For those who have copied, we are having the inventory, the trade receivable, and the trade payables. Remember, for the current asset, if there is any increase, that will be an outflow, because if your stock increases, you should have spent some money for your stock to increase. That is an outflow. But if the stock decreases, that is an inflow. For the current liabilities, an increase is an inflow, while a decrease is an outflow. Now let's start with the current assets. We are having inventory. Remember, inventory it has increased from 33,120 to 41,400. So we say increase in inventory. It has increased from 33, it has increased 31 to 41,400. It has increased from 33,120 to, so we take 41,400 subtract 33,120. So that will be an outflow. An increase will be an outflow of how much? If I take 41,400 subtract 33,120, getting 82,80. We also have increase in trade receivable. Stroke debtors. Another name for trade receivable is debtors. So it has increased this debtors, stroke debtors. Now it has increased from 16,560 to 20,162. Now we take 20,162 subtract 16,560. That will give me how much? If I take 20,162 subtract from 16,560, getting 36,02. That will be an outflow, since it is an increase. It's an increase from 20,162 to 16,560 getting 36,02. Lastly, we have the increase in trade. We call it trade payables. Stroke creditors. This is also called the trade payable, also called the creditors. It has increased from 11,040 to it has increased from 11,040 to 16,560. Now we take 16,560 subtract 11,040. So we take 16,560 subtract 11,040. 55,20. This is an increase. An increase in current liability is an inflow, because let's say creditors, you have someone on debt. If has paid you, it means you are receiving money. Your trade payable has increased. That's why it's an inflow. So we'll have a positive sign of 55,20. So the change in working capital will be, so let's say change in working capital. We take minus 82.80, since this is negative. Then subtract also that 602. Then add 55.20, getting 63.62. Working capital. Before that, there is a correction here in the trade receivable. The amount, the trade receivable, this is 20,152, not 162. I hope you correct it. The amount should be 20,152, not 6. 20,152. I confused. It was not 6. It is 5. 20,152. If I subtract 20,152 from 16,560, if I subtract 20,152 from 16,560, I'm getting 35.92. 35.92. So let's repeat again the change in working capital. The change in working capital is going to be 35.90 minus 82.80, subtract 35.92, then add 55.20, 63.52. Then we add back to the, remember this is the change in working capital. Here we have the cash flow from the operating activities before working capital. Therefore we add we add so that we get the cash flow from operating activities. Cash flow from operating activities before tax. So we're going to take, remember this is negative 63.52. This is negative 63.52. This is negative. So we take 88,040, subtract this. So we take 88,040, subtract 6352. 81,688. Then we say less tax paid. The tax paid is 16,560. So we subtract 16,560. Subtract 16,560. So we're going to get how much? 16,560. 81,688 minus 16,560. So the net. Now we get the net cash flow. Net cash flow from the operating activities. Net cash flow from the operating activities is how much? Now we take this 81,688, subtract this, which I got 65. Now we write it on the end, on this column. This column on the end. So it is 65,128. That is our net cash flow from the operating activities. Remember, we have taken the profit before tax, we add back the loss on disposal, the depreciation, and the premium redemption. That has given us the cash flow from the operating activities before working capital. Then we calculated the change in working capital, whereby we have an increase in inventory, increase in trade receivable, and increase in trade payable. Then we got the change in working capital. Then we have subtracted from the change the cash flow before working capital. Then we subtract tax. Then we get the net cash flow, which is 65,128. Now I'm going to wrap this side so that I also show the cash flow from investing activities. Allow me to wrap this side so that I show the cash flow from the investing activities. Now we go for our next cash flow. Cash flow from investing activities. Remember, we are having this side as shillings. The figures are in thousands. Also shillings, the figures are also in thousands. Now, let's start. We are having here a proceed from sale of assets. So let's start with that. It's an inflow. Proceed from sale of an asset. The amount there was 8280. That's number 6. That's an inflow. Now remember we are having 3 acquisition of an asset: the building, the plant and equipment, and also the motor vehicle. So let's start with the building. So we are having acquisition of building. The amount of building is 22080. You also have next is acquisition of plant and equipment. Plant and equipment. The amount there is 93. Remember, this is an outflow, so it's have a negative sign. The same with plant and equipment, an outflow 93,840. Last, we are also having acquisition acquisition of motor vehicle. The amount we acquired on motor vehicle is 73.44. 73.4. Remember, we already shown all these workings. Remember, we have shown all these workings. It is good to write like the acquisition of building you got from which working, so you can write it. Maybe if it was working 5, write down there working 5. Now let's get now the net cash flow. Net cash flow from investing activity. Net cash flow from investing activities. So I take 8280, subtract 22,080, subtract 93,840, subtract 73,44. I'm getting 114,984 minus 114. We write at the end on this column 114,984. 114,984. That is net cash flow from investing activities. Now we go for our last cash flow, which is the cash flow from financing activities. Cash flow from financing activities. Start with the issue of shares. Now the issue of shares. The issue of shares, these are inflow. Let's have there 2 columns. Remember, these figures are in thousands. Also the shillings in thousands. Here. The issue of shares, that's an inflow of 66. Number 11, sorry, it was number 12, the last one, 66,240. 66,240. Remember, we also have debenture. Debenture, that's an outflow. Debenture redeemed. That's an outflow of 12,144. 12,144. Remember, we also have in the question, we are having a dividend paid. We're giving the interim and the final. So if you add in the income statement, we are told dividend interim is 55.20 and 82.80. So the total dividend is 13,800. 13,800. So we say here dividend of 13,800. Remember, the dividend, the balances, the figure were the same. So there's no dividend in the balance sheet. But if the figures could have been different, we could have shown a working for dividend, whereby it's behaved like the taxation. The balance brought down will be on the credit side, and the balance carried down will be on the debit side. Then the dividend for the year will be on the credit side. Then you get the dividend paid. But now we are just have the 13,800 as our dividend. Now let's get the net cash flow from financing activities. Net cash flow from financing activities. We take 66,240, subtract 12,144, subtract 13,800. I take 66,240, subtract 12,144, subtract 13,800. I'm getting 40. I write at the end 40,296. Now we have calculated the net cash flow from the operating activities. We also have the net cash flow from the investing activities. We also have the net cash flow from the financing activities. Therefore, now we get the net changes for the year. It may either be it is either an increase or a decrease. If the figure we are going to get here is positive, it will be net increase for the year. But if the figure will be negative, it will be net decrease in cash and cash equivalent. Let's confirm. And remember, we said for us to get the net changes, we take the cash flow from the operating. Let's say the cash flow from operating is A plus B plus C. Now let this be our A, let this be our B, let this be our C. If I take A is 65,128. I add to minus 114, 149.84. I also add to C, which is 40,296. I'm getting 95 minus 95.60 minus 95.60. Since this is negative, now it will be net decrease. So we say net decrease in cash and cash equivalent. In cash and cash equivalent for the year. Then remember, now we are going to add back. We are given the cash, the balance, the bank balance, cash in hand. The one for 2014 is the cash changes, the opening cash changes. Then the 2015 is the ending. Now from this amount we are going to add 6,800. Then we'll get the net changes at the end. Now we say add opening in cash. Let's put it in like this. We say add cash, add cash and cash equivalent at the start. Now we have it as the cash and cash as 2014 is 6,800. 6,800. Then the difference will give us cash and cash equivalent. Cash and cash equivalent at the end, which is 2760. Let's confirm. If I take minus 9560 add to 6,800, I'm getting minus 2760, of which it is equal to the amount given in the question, 2760. Now that is all about this question. If you follow the workings very well and show the correct workings, then this is very easy. So that's how we show the cash flow statement under indirect method. We only group the activities into three: cash flow from the operating activities, cash flow from the investing activities, and also the cash flow from financing activities. That is all about this class. Hoping to see you in the next class, where we are going to do more of some other topics in accounting. May God bless you. Thank you for watching.